Hey everyone, Douglas here, and tonight I want to discuss a very concerning trend that I'm seeing emerge in some of the core data that I look at. And hint, it has to do with the chart on your screen right now. But before we get into the nitty gritty of the details on this, if you are new here, make sure you hit subscribe and turn on that notification bell. And if you do find this video especially helpful, it really helps that YouTube algorithm if you hit that thumbs up button and give this video a like. So I would appreciate that as well. And certainly when these videos get more views, it gives me a little bit more reason to be a little bit more active on getting stuff up. So there's my plea for tonight. One more kind of quick word of warning. Normally when I do these updates, these videos for YouTube, I have a bit of a short script that I follow that kind of keeps me on point, keeps me on track. I'm doing this extemporaneously, so if I ramble on a bit, bear with me, but hopefully I can get this done in one coherent take that all makes sense. So let's see, what is it that you're looking at on your screen? What you're looking at is the federal tax deposits, and this specifically is the daily federal tax deposits, the yearly average of that. Okay, and I'll explain in a few minutes exactly why I kind of do what I do and why I break down the data that I break down and exactly what this is, but and how it pertains to kind of the concerning trend that I'm seeing emerge. But real quick, just to kind of take a step back and get a bigger picture, if you will, or just make sure that we're all starting at the same spot here in terms of why we would even care to track this and look at this. Really the foundation of my macro analysis begins with an MMT, or modern monetary theory, understanding of how the fiscal system works. Okay, and at the heart of MMT is this idea that the public sector debt is the private sector savings. Okay, and so essentially the larger the deficit is, the more money that is heading into the financial sector. And when this happens, it creates a at least stable economy. Okay, and so we've seen this happen a handful of times in the last 100 or so years, where when the fiscal side of things goes into surplus or near surplus, that's when we get the most unstable economies. This happened before the 2000 crash. This happened before the 2006, 2007, 2008 great financial crisis. This happened before the Great Depression. When we see the deficit essentially shrivel up and we start to see money removed out of the economy via surplus, that's when we get into issues, because the economy is solely reliant on the what I would call more the business cycle, or the financial system, to create that money endogenously through loan creation and credit creation. Okay, so that's kind of the basis for kind of what an MMT view would be of the economy as it would pertain to someone who's viewing the economy through kind of the lens of an investor or a trader. So over the past decade, since the Great Financial Crisis, we've seen a precipitous rise in the deficit, and we've had very few issues. Maybe around 2015, 2016, we started to see things get a little tight there, but for the most part, we've had a very robust deficit, and certainly post-COVID with the multiple stimulus bills and the direct cash to American citizens, we've seen a huge influx. The kryptonite, if you will, to all of this and to this entire system, if the fiscal flows, as I like to call them, if that deficit spending is the necessary water, if you will, for the financial system that it needs to swim in, then the kryptonite is the drain at the bottom, and the drain at the bottom is the taxes. Okay, when taxes are received or deposited with the Treasury, they effectively fall off the balance sheet. It's really quite literally a drain on the private sector savings. and drains that money out of the economy. Okay, so I hope that picture helps. That illustration helps understand what's happening here, and as we get to kind of what's on the chart, exactly why I see this as a concerning trend. So essentially, when taxes start to outpace spending, you're going to get in a situation where money is draining from that pool of money that is the private sector savings, and that's exactly what we're starting to see. We have seen a takeoff here, and I can go ahead and just kind of circle what we've seen. The takeoff that we've seen in tax deposits has really been unprecedented, going all the way back to when you can get this data. And this data is readily available, freely available on the daily Treasury statement. I think it's Table 4 tracks the daily federal tax deposits in detail. And what I specifically do, and I pair this with a handful of other data elements that I track on the daily Treasury statement to kind of come up with my own personal proprietary take on what is fiscal flows. And when you pair all these together, you can kind of get a picture of exactly how much money is in the economy and kind of what to expect in a more forward time frame. And if you're interested in that, real quick plug, check out the Patreon page, patreon.com/CannonMA. I mean, I track that stuff every week, and we go over it and the implications that it has, amongst many other things. So if you are interested in a deeper dive, and you are an active investor trader, you can get that information there. But back to the details on this. What this is this is the daily amount of money that is on average being taken in taxes from the or to the federal government as deposits into the Treasury. Now, this chart can look a little misleading because as the deficit grows, you're naturally going to get more taxes, right? So as the deficit grows, there's just more money in existence. And so as that money turns over, it's going to be taxed back, right? And certainly we've seen, again, since the stimulus packages that started, I think in April of 2020 until today, we've seen an absolute deficit explosion. So it's no surprise that we've seen a bit of a pop in the tax deposits that are coming back. But what is showing up, and it's very clear in the data, is that it is now actually slowing down quite precipitously the rise in the deficit that we've been seeing since March of 2020 last year. And so I'm definitely expecting during the next deficit print that we will start to see a slowing down of that growth of the deficit. Quite a lot. It has to do with this number right here, and that really is kind of the summation of the concern here. And what my biggest concern is I think in the immediate, in the coming weeks, months, we will likely see this level out. It is the extension. There was a 1 month extension on tax day, so the last of the tax flows will be hitting soon. So we should see this start to level out. But what concerns me here is that in the political climate right now, there's both a very big push to do another spending bill, this one on infrastructure, and there's also a very strong push to increase taxes. Okay, so we're already seeing taxes eat away at a deficit that is very sufficient to continue a bull run. And the question is, will the taxes end up being first before the next infrastructure spending? Okay, and will there be any desire to do any sort of pay-go or anything like that, right? Will the fiscal hawks, the deficit hawks, ultimately force some sort of deficit leveling, and will we see ultimately those taxes push higher? Will we see this trend continue? And that is really what I'm going to be keeping an eye on into the future here. Again, I don't expect any of this to play out in the next 3 months, 6 months. 6 months would be the earliest where something like this would truly have a detrimental effect to kind of the core undergirding of the economy. This data in specific is a little bit slower to move, and definitely the selling that we've seen over the last couple days, while maybe tangentially related, is not directly related to what we've seen in terms of the rise here of tax receipts for the federal government. But keep an eye on tax deposits as a whole, and then also just if the tax hikes come in before the new spending comes in, and the trend that we're seeing continues, and we continue to see that deficit shrink and shrink and shrink, which we're definitely going to see in the next print. Be very concerned about the overall makeup of the economy, okay? Because it will create a scenario where the economy, if it's going to continue to grow, will be much more reliant on the financial sector. And that financial sector side of growth, which is primarily loan creation and what is more traditionally understood as the business cycle, is far more volatile and usually has systemic issues built into it during the peaks of the cycle, and so sell-offs can be far more severe if the kind of core base here, which would be the deficit base, the debt base from the public sector, if that is absent, then you can see a far stronger sell-off emerge. So I think that hits all the main points, kind of why this is a concern and how I'm seeing things, potentially playing out in the future. Again, this is not necessarily a call, but a very concerning trend that I was a little surprised to see as I track this day in and day out, that this trend ended up emerging. So again, as it stands right now, this is a concern that could quickly become a problem in the not too distant future. And if this plays out and we continue to see this trend emerge, it definitely will be what brings to an end the current bull run we're on. So this definitely could be an impediment to the longer term bull run that we've really been on since the end of the great financial crisis. Sans obviously the brief dip that we saw post the financial meltdown during COVID. But that's my take and kind of how I'm seeing things. So like I said, if you're new here, make sure you hit that subscribe button, turn on that notification bell. And if you like this video, you like this kind of extemporaneous take and this works for you, let me know by hitting that like button and maybe comment down below if you want to see more like this. They're obviously a little bit easier to do if I'm able just to kind of hit record and riff away on my thoughts. So yeah, let me know your thoughts. Anyway, I'm going to wrap things up from here. And yeah, until next time, good trading, everyone. And we'll talk to you then. Bye-bye.